we begin, I just want to say the following is opinion only and is for entertainment purposes only. It is not legal advice and should not be construed as such. I make no representations as to any of the claims asserted herein. Additionally, the following, once again, is opinion only. It's not an offer to render legal services, and no attorney-client relationship is formed or asserted. As always, consult with your own legal, financial, and/or tax advisor. Tax season has come and gone, and for some folk, that means something new. The 1099-K. Now, what is the 1099-K? Simply put, it's a tax form required by the IRS, wherein third parties who pay you money report the monies paid by them to the IRS. These third parties are processors such as PayPal, Venmo, Square, Cash App, and also marketplace type entities such as eBay, Etsy, or everyone's favorite, Reverb. But why now? What changed? Well, what changed is for a while, some people had been making money on what's called retail arbitrage. That's just a fancy term meaning buying goods at place A and selling them at place B for a small markup. A common one is buying diapers at a wholesale club store such as Sam's Club or Costco and then reselling them on an Amazon Marketplace. It's really not a huge markup, but it adds up. Another common one is people going to, for example, Goodwill and then reselling those goods on eBay. There are anecdotes out there of people who go down to the local Goodwill or thrift store, buy old jeans from the 80s and 90s, and then resell them at a large markup on eBay because they command a premium overseas. Now, the IRS saw that there were people making a lot of tax-free income this way. So what they did is they told these processors and marketplaces, they said, hey guys, you all are just basically computerized records anyways. So we're going to tighten the reporting requirements and lower that threshold. So now these companies are required to report very low thresholds. Now, when you get this 1099-K, what you will see, number one, is your social security number, or if you're a business, your EIN. Basically, what this should tell you is that the IRS knows you made money. So, how do you actually get paid when you sell something on eBay or Reverb? Well, the buyer is not paying you. If you go and check your credit card statement, and you really should, you'll see when you buy something on Reverb, you might buy that guitar from Marty's Mega Mart and House of, Blues, but when you actually pay the money on your credit card, it shows up as reverb.com. And that's because the buyer is paying the third party. The third party is really better known as a middleman. Now, that third party takes a cut and forwards the remainder to you, the seller. So that remainder is going to get reported on the form. And like I said, it will have your social security number so that the IRS can make sure that you are being honest when you report your income on your own return. That now brings us to the next question. What exactly is income? Well, the rule is pretty much any income is income unless it's otherwise excluded. So that includes any money gained from selling goods or services unless it's somehow excluded. Gross income, that's all the money you take in, minus your deductions, that's your taxable income. That includes guitar and gear sales. I'm sorry, it sucks, but that's the way it is. If you sell personal items, you have income on that. No, you cannot deduct the cost of the item that you paid for. Cannot deduct that. Basically, if you sell a $20 toaster that you paid $15 for, well, congratulations. You need to pay the full tax on the full 20, not just on that $5 of profit. You cannot deduct the costs that you've invested in that good. Now, what if you paid $1,000 for a guitar and you only got $1,000 for it? Well, you're going to have $1,000 in taxable income. That you didn't turn a profit on it, not relevant. You, like I said, can't deduct losses on selling personal items. Now, this could be different if you're in the business of buying and selling goods or you're a musician. But in that case, that's not going to be your own personal income tax. That's going to be your business's income tax. But if you're going to do that, you're going to need two things. That is your EIN and receipts. You'd better have receipts. Now, not all business expenses are deductible. For example, I can't deduct the cost of my suits, my ties. I can't even deduct my law licenses. Why? Well, once again, because the IRS says so. It's the golden rule. He who has the gold makes the rules. The IRS has the gold, so they're gonna make the rules. Moreover, even if you could deduct your investment costs in that good, you have to prove it. And you have the burden of proof. You can't simply say, well, I paid X for it, so that's my cost. It's not enough. Like I said, you'd better bring the receipts. An actual receipt, not just some printout. Now, there are other costs involved. The big one is fees. Marketplaces exist, but not out of the goodness of their corporate little hearts. Reverb, for example, they charge at a minimum about 7.7% of the sales price. Now, that's 7.7%. That's broken down. There is the actual marketplace fee, and then there is their processor fee. Right now, their marketplace fee is 5%. 5%. On top of that, there is then the 2.7% processor fee, and that's where the 7.7 comes from. Now, there was a big hullabaloo earlier this year because their parent company, Etsy, said that they were going to raise their fees on Etsy, not on Reverb, on Etsy, to 6.5. In fact, it got to be so worrisome that last week, what they said is that they do not presently plan to raise their seller fees on Reverb to match. Now, that's what they said last week, and they said they don't presently plan to. Presently. In the legal business, that's what's known as wiggle room. So, that also doesn't include bump fees. Bump fees, when you go on Reverb, you'll see the Reverb bump. Well, again, Reverb didn't do that out of the goodness of their heart. They are charging the seller anywhere between 0.5%, not a lot, to 5%, which is a huge amount. That is 1/20th of the sales price. Now, on top of that, eBay. eBay has been playing catch up with Reverb. For a long time, eBay was really where you went between them and Craigslist. But Reverb, they came up fast. So eBay is playing catch up. Now, eBay uses PayPal. That is actually owned by eBay, and it has a higher processor fee. So right now, eBay, their fees are a little higher than Reverb. Again, Reverb said they don't presently plan to hike their fees. They might, though. Now, believe it or not, and I'm sorry to tell you this, but you cannot deduct your sales fees from, your income you receive from selling a guitar. Like I said, what you get, that's your income. You don't get to deduct the cost of the guitar. You don't get to deduct the shipping fees, the reverb fees, the PayPal fees. You don't get to deduct the pain and suffering and the emotional distress that you're going to incur when you say bye-bye to your favorite guitar. Sorry, you made money. You're going to have to pay the taxes on it. Now, that brings us to the next point, and that is whether or not you can actually still make money selling guitars. For a long time, there's been a canard out there, the old belief that, hey, invest in guitars. They always hold their value. You'll always be able to sell your guitar at a profit. Now, it's one of those things, it's said so often, and it's such a hopeful message that everyone believes it to be true. Well, sorry, it really isn't. Now, a prime example would be, for example, my Les Paul Standard. Now, I bought this guitar back in 2005 for $1,200. Now, I got it on Craigslist, so I don't have a receipt. It's probably somewhere in an old Gmail. Hey, let's meet up at the Starbucks. I'll bring the cash. But this guy did not write me a receipt, okay? So any proceeds that I'm going to get from selling my 2005 Les Paul Standard are going to be taxable income. No two ways about it. Now, let's say I take it and I sell it on Reverb. It's the quickest, easiest way, right? Now, I look on Reverb, and one of the things I can do is I can get a pretty good idea of what these things are selling for. So if I go in and I look up 1990s, Les Paul Standard in excellent condition, what I find out is that I can probably reasonably expect a sales price of about $2,100. Now, I could set my price higher, but it's going to sit longer. If I set my price lower, it'll sell quicker, but that's going to eat into any profit I could expect. So let's say I put a sales price of $2,100, and I sell for the $2,100. Well, the reverb fees are going to be $160. What that does is that leaves me with $1,940. So what that's going to happen after I get that $1,940 is Reverb is going to send the 1099K, and it's going to say, I, Matt, made $1,940 taxable income on that sale. And because it's above the $600 threshold, oh yeah, they're going to send it. So I've already lost $160 to fees. And now what I can expect is to lose whatever my effective tax rate is out of that remainder. Now, right now, my effective tax rate is around, I'm just going to call it 15%. It's a round number. So what that means is I'm going to lose 15% of that 1,940 to taxes. That's about $290. So I've lost $160 in reverb fees, and I've lost $290 in taxes. So that means I've lost a grand total of $450, leaving me with $1,650. Now, like I said, I bought that guitar for $1,200, right? Hey, that means I still made $450, right? Wrong. Inflation exists. And if I go and I look at the Bureau of Labor Statistics, I find out that that $1,200 I paid back in 2005, today that's $1,800. So what that means is I have actually sold at a loss. I have sold my guitar, which is in great condition, right? And it's a Gibson Les Paul. Oh, this thing is primo. It's from the good wood era. I have sold it at a loss. So, even with that $1,200 basis, let's say I could prove somehow that I paid $1,200 for and that the IRS is going to be nice to me and say, oh, yeah, sure, we're only going to tax you on the gains. Well, I'm still only clearing a grand total of $30. That's right. So, selling guitars as an individual is a losing proposition, even on the best day. Simply put, selling your guitars online, I know I singled out Reverb. It's because they're right now the 800-pound gorilla in the room. Same thing with eBay. Same thing with any other online service. If you go to an auction house, they're going to charge you fees. Any of them, it's going to lose you money. Don't do it. Now, that just leaves really Craigslist and Facebook Marketplace. Now, these two, what makes them different is you're not selling it through them. No money goes through Craigslist or through Facebook Marketplace. These are just ways to do a face-to-face meetup. However, that then brings the third-party apps like Venmo. Now, Venmo is tempting because it's a cashless alternative. If I'm a buyer, I don't want to go driving around with, $1,200 in my pocket or whatever. What's more, even though I'm in my 40s, I still don't carry cash. I just don't. And I'm willing to bet that people younger than me, they don't carry cash either. So you say, oh, just Venmo it to me. But that's the thing. Venmo is a payment processor. And Venmo, number one, they're going to take a little bit of a cut. Number two, they are going to report that income. They are going to send a 1099-K saying that the money went to you. So now the IRS knows that you have the money. And all processors are going to do this. They're all going to report through 1099-Ks. So, bottom line, how can you flip guitars nowadays without having to worry about losing money to fees and taxes? Sorry. The only way to do it nowadays is selling face-to-face with cold, hard cash. Okay? Cash is king. And unless you're prepared to do that, don't expect to make money flipping guitars. You're gonna lose money. When you look at your guitar, don't see dollar signs. When you look at your guitar, see music notes. Guitars aren't for making money. If you want to invest, buy an ETF, buy a mutual fund, buy a hot stock. Don't buy an NFT. Please don't buy an NFT. But don't buy guitars. It is not a sound investment. So, that's just my 2 cents.